With all the tariffs in 2025, U.S. imports from China fell off dramatically, and U.S. imports from the rest of the world actually increased. The U.S. tariffs in 2025 did shift some supply chains out of China. The most famous example is probably the iPhone. The 20% tariffs that President Trump imposed on all products from China in February and March last year included the iPhone for the first time. Well, what Apple did was to switch its sourcing and suddenly start bringing into the United States iPhones from India instead of China. It's not just smartphones, laptops, monitors, other goods like that as well. But we are still importing a lot of goods from China where supply chains have not been able to move, including things like rare earths, permanent magnets, critical minerals. A lot of these goods were the ones that China suddenly weaponized in 2025 with export restrictions. That meant American manufacturers, the automobile sector in particular, lost access to inputs and almost had to shut down production. U.S. exports to China have fallen dramatically. That includes manufacturing, agriculture, and energy. In manufacturing, the slightly positive news is that aircraft sales have gone up. Boeing has resumed deliveries of aircraft to China after many, many years of not being able to do so. But for all other manufactured products, it's not a good story. Automobiles used to be a major U.S. export to China. In the first trade war of 2018 and 2019, the higher costs of steel and aluminum associated with the U.S. tariffs at the time, and China retaliating against U.S. exporters with tariffs of its own, meant that companies like Tesla decided to stop producing in the U.S. for the Chinese market and set up facilities in China to manufacture for the Chinese market there instead. This is what we call tariff jumping foreign direct investment. It's a related story for semiconductor manufacturing equipment. These are the tools that cost tens of millions of dollars to set up a production facility to make semiconductors. The United States has a lot of companies that are really world leaders in this space, and exports to China of these sorts of tools really boomed, especially in 2021, when China got very worried that the US government was going to impose export controls. So their demand increased and they started hoarding. US exports have fallen off since then, but in part that's because these American companies are shipping less from the United States, and they have set up other production facilities in other countries, Singapore, Malaysia, to be able to sell to China instead. US agricultural exports to China also really have been suffering. Soybeans, as we all know, is the major US farm product. 1 in every 3 rows of soybeans planted in the United States are shipped to China in normal times. Those were decimated by China's retaliation in 2025. And despite the fact that at the end of the year, Presidents Trump and Xi had a meeting in South Korea and declared a truce, and China agreed to buy more of these farm products, the numbers really just don't support the idea that they have yet to come back. And it's not just soybeans. Cotton, beef, corn, wheat, basically all American farm exports to China are just really suffering.